Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we're going to be looking at investments on the cash flow statement. As I do in each one of these fundamental analysis tutorial videos, I'll give you the actual definition and then we'll go on to look at some examples. For this particular video, I thought rather than repeating what an investment is, which you probably already know, to kind of bring to light that this line item that we're about to look at on the cash flow statement actually correlates to the long-term investments that you see on the balance sheet. So just kind of refresher for you if you haven't already watched the balance sheet tutorials, just kind of give you an idea. Remember, all these the balance sheet, the cash flow statement, the income statement, they all connect in different ways, and so whenever you see an item on one, you can always go check it on another, and so forth and so on. So again, let's get going on this, and I'll give you some examples. A long-term investment is a non-current account on the asset side of a company's balance sheet, which represents an investment a company intends to hold for more than a single year. Long-term investments may include stocks, bonds, and real estate, etc. Now let's go look at the cash flow statement. For this example, we're looking at Walmart Stores Incorporated, the cash flow statement, the annual data. And as you guys know, if you've been watching these videos in order, you know that the first section of the cash flow statement, and it is broken into three sections, but the first section covers the operating activities, the actual buying or the selling of their products or their services, and actual how much cash is generated from the normal operation of their business. And then we move down into the second section, which is the investing activities, and this is money that you'll see flow out of a business or into a business, but doesn't necessarily have anything to do with the actual running of the core business, and so it's important to keep that in mind. We'll go into this in more detail, but if you had a company that was trying to run a store or something and it wasn't making any cash flow, and then you would find a situation where the company would start to get into trouble, and they have different ways for adjusting for that. I mean, you need cash to pay bills, and that's just the reality of running a business. So if you had a situation where you were making sales, you would be able to record an income, but perhaps those sales were, we'll buy this from you and pay you later. Well, those are showing the income figure really great, but if you don't have cash, then how are you going to keep the lights on in the store, right? Or how are you going to keep paying the requirements on your debt? So you could end up with a real tight cash situation here from the operating activities, and that would keep you where you were not capable of making capital expenditures, which would start to hurt the company. Or you could see investments decline, and in situations where they have just a real tight need for cash, they can start to sell previous capital expenditures or some of their investments. And again, investments is here on the cash flow statement, and this ties to the investments on the long-term investments on the non-current assets on the balance sheet. So that's something you can look at as well. Again, here typically they're going to be in negative numbers, and you see in this case here it's negative for the past 3 years, and that basically means cash is flowing out of the company from here that they had left over. It's flowing out of the company, and they're making investments, and you have to go look and see exactly what investments they're making by looking at the annual report of the company. But in a lot of cases, it's just going to be bonds or equities that they plan on holding for longer than 1 year. That's important to know that it's long term, longer than 1 year. Okay. Now let's assume for one moment that the company had, in this case we don't have it, but let's assume that you're looking at a company and they didn't have any cash flow from operating activities, or very low, so they weren't able to make any capital expenditures and grow their business. And instead of seeing a negative number here, you saw a positive number. If you saw that, you would know then that the company had cash flow in from the sale of investments. They had some net gains there from their investments, and that inflow there can be the result of not having enough operating activities cash flow here, and that would force a company to start looking for cash in some other way. This is only one of the other ways they can do it. They can also come down here to the financing activities, and we'll get to that later in other videos. But just in case you're wondering what happens if you see a positive number, well, that simply means they've reversed the process and cash is now coming in because they were selling off investments. The same thing can happen with capital expenditures. They could sell certain plants that they no longer feel are necessary, or maybe they're forced to sell them and they thought it was necessary, but they just need the cash. So there's different things that can happen here, but keep your eye on that. Whenever you're looking at the investment activities, you know that if the company's only got cash because they've got positive numbers on the investment section there, then the company's actually running low on cash and being forced to cannibalize itself, and that's important because that's actually the company falling apart, and that's really important to investors. You don't want to see that, right? Now you know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.